What if I told you the best hedge against inflation isn't gold, even though that's what we've been taught for decades? Not stocks either, and not even real estate. That sounds strange, right? Now imagine a community that avoids modern finance completely. No hedge funds chasing returns, no derivatives, no central banks printing money. On paper, they should be vulnerable. But they're not. They endure, generation after generation. While markets boom and bust, they stay steady. That's the paradox. And once you see it, you realize protection doesn't always come from complex financial products. Sometimes it comes from a completely different way of thinking. This is the Amish Hedge. For as long as money has existed, people have worried about losing it. Long before stock markets and retirement accounts, the big question was simple. How do I make sure what I earn today still means something tomorrow? In uncertain times, when kings changed laws overnight or wars wiped out entire cities, people needed something solid, something that couldn't be printed, diluted, or argued away. That's where gold came in. It didn't rust, it didn't disappear, and almost everyone, everywhere, agreed it had value. For thousands of years that agreement held. Empires collapsed, borders shifted, currencies vanished, but gold coins were still accepted in the next kingdom over. You can see this play out across history. The Romans debased their silver coins to fund wars, shrinking their value little by little, yet gold quietly kept its purchasing power. During the Middle Ages, merchants carried gold along ancient trade routes, not because it was convenient, but because it was trusted. If you were crossing continents with your life savings, you didn't want promises on paper. You wanted something real, heavy, and universally respected. In a world where money was often tied to the whims of rulers, gold felt like financial insurance. Then the modern world arrived, and everything started to change. Paper money became common, first backed by gold, then gradually detached from it. Central banks were created to manage economies, smooth out recessions, and respond to crises. On the surface, this made life easier. Money became lighter, faster, more flexible. But it also introduced a new reality. Money could now be created with the stroke of a pen. Debt became normal, governments borrowed, banks lent, and economies grew on credit rather than hard assets. At first, gold still seemed essential. After all, paper money was supposed to represent it, but once currencies fully broke away from the gold standard, the relationship changed. Gold no longer anchored the system, it simply existed alongside it. Inflation became a policy tool, not a disaster. Markets became more complex, more interconnected, and more volatile. And while gold still felt safe, it stopped behaving like a perfect shield. Think about it like this. Gold is like a family heirloom watch. It's valuable, respected, and has survived generations. But it doesn't help you earn a living. It just sits there, quietly preserving what it already is. In a fast-moving, debt-driven economy, that can be comforting, but it can also be limiting. Gold doesn't produce food, generate income, or adapt to new conditions. It protects against extreme collapse, but it doesn't participate in everyday progress. Over time, gold shifted from being a necessity to a symbol. People bought it because their parents did, and their grandparents before them. It became tradition, a reflex, a default answer to fear. And while tradition can be comforting, it can also blind us. The world had changed, but our instincts hadn't, art up yet. Gold was no longer the backbone of the system. It was a relic of how safety used to work. If gold is supposed to protect us, then it's worth asking a simple question: how well has it actually done? When you zoom out and look at a long-term graph of gold versus inflation, the picture isn't as exciting as most people expect. Since around 1980, gold has mostly just kept up. Some years it jumps, other years it sinks, but over decades it barely pulls ahead. And that's before you consider something important. Gold doesn't grow. It doesn't compound like a business reinvesting profits. It doesn't pay rent like real estate or dividends like stocks. If you buy gold and lock it in a safe, it's still the same bar years later, just sitting there, waiting. Think about how investing usually works. You put money into something, that thing produces value, and part of that value comes back to you, which you can reinvest. That's compounding. It's like planting a tree that drops seeds ever. Yeah, gold is more like a rock, solid, reliable, but it doesn't plant anything. In long stretches of time, especially during stable economic periods, gold can feel invisible. It just exists, quietly doing nothing, while other assets are actually working. Here's where the tension really starts to build. While most investors were debating whether to buy gold, stocks, or bonds, there was a group of people doing something completely different. They weren't reading financial news or watching market cycles. They weren't trying to time inflation or predict interest rates. In fact, they avoided modern finance almost entirely. And yet, they were building wealth that lasted not just decades, but generations. Picture rolling farmland, simple homes, and families working together from sunrise to sunset. The Amish didn't buy gold. They didn't hedge with complex assets or diversify portfolios. They didn't speculate on future prices. To them, chasing returns looked more like chasing uncertainty. Instead, they focused on stability, usefulness, and control. That alone sets them apart from most of the financial world.
What's surprising is how effective this approach has been. While markets swing wildly, their lifestyle barely changes.
When inflation rises, their costs don't explode the same way because they produce so much themselves. Food, housing, labor, even transportation are largely internal. They don't need assets to perform in the market because their wealth isn't measured on a screen. It's measured in land that grows food, skills that generate income, and communities that support each other. This is the unexpected part. They aren't hedging with assets at all. They're hedging with systems. Systems that reduce dependence on money, prices, and outside institutions. Systems that turn effort directly into value. When the economy gets noisy, their world stays quiet. And that raises a powerful question. If gold is meant to protect purchasing power, what happens when you need less purchasing power in the first place? That's the tension. And it points towards something far more powerful than any metal locked in a vault. This is where everything clicks. The Amish Hedge isn't a stock, a metal, or a clever financial product. It's something far simpler and far more powerful: productive self-sufficiency. Instead of asking, how do I protect my money? They ask, how do I need less of it in the first place? That one shift changes everything. Imagine owning land that feeds your family. No price tag on the grocery shelf can touch that. If food prices rise, it barely matters, because the food is already there, growing quietly in the field. They build their homes the same way. No massive mortgages stretching decades into the future. No anxiety about interest rates jumping overnight. Homes are built with community labor, local materials, and practical designs. When you don't owe the bank, rising rates lose their power over you. It's like rowing your own boat instead of hoping the tide goes your way. You're slower, maybe, but you're in control. What really seals it is how they think about skills. In the modern world, wealth is often tied to a job title or a resume. Lose the job and the income disappears. The Amish pass down skills instead. Farming, carpentry, metalwork, construction, repair. These aren't abstract talents, they are directly useful. If something breaks, they fix it. If something is needed, they build it. Labor turns straight into value without a middleman taking a cut. That's a powerful hedge in any economy. Now think about inflation. For most people, inflation feels like running on a treadmill that keeps speeding up. Your wages chase rising prices, and you hope they don't fall behind. For the Amish, that treadmill barely exists. Their cost of living is low and stable because so much of it is self-produced. Food, housing, even transportation costs are largely under their control. When prices rise in the outside world, their internal system absorbs the shock. Supply chain problems are another great example. When shelves go empty or deliveries get delayed, most people feel it immediately. But if your food is local, your materials are nearby, and your needs are simple, disruptions fade into the background. And when currencies weaken, when purchasing power drops, the basics of life remain unchanged. You can't eat a currency, but you can eat what you grow. Their return on investment doesn't show up on a chart. It shows up in calm, in resilience, in the ability to keep living the same way no matter what headlines are screaming. Gold protects purchasing power, but only if you keep needing to buy things. The Amish hedge goes deeper. It reduces the need to buy in the first place. That's the real revelation. Here's the part that really matters, because this isn't about giving up modern life or moving to a farm. You don't need to become Amish to take this lesson seriously. The idea isn't to reject markets, technology, or investing. It's to rethink what real protection actually looks like. Instead of only asking how to grow your money faster, you start asking how to make your life more stable. That shift alone changes the way you see wealth. Start with skills. Skills are one of the few assets inflation can't touch. If you know how to fix things, build things, cook well, manage people, or solve problems others struggle with, your value doesn't disappear when prices rise. Think of skills like a personal money printer, but one that runs on effort instead of debt. The more useful the skill, the more resilient your income becomes. Then there's productive land or assets. This doesn't mean buying a massive farm. It could be a small rental property, a garden that cuts grocery bills, or even solar panels that reduce energy costs. The key is production. Assets that generate something tangible, whether that's food, energy, or cash flow, cushion you from economic shocks. They lower your ongoing expenses, which is just as powerful as earning more. Businesses matter too, especially ones that solve real, local problems. During uncertain times, flashy ideas often struggle, but practical services keep going. People always need repairs, food, transportation, healthcare, and basic services. Owning or investing in businesses tied to real needs is like anchoring yourself to reality instead of trends. When things get rough, usefulness outperforms hype. The biggest takeaway is systems. Most people are deeply dependent on institutions they don't control: employers, supply chains, banks, and governments. Reducing that dependence, even slightly, is a powerful hedge. An emergency fund, multiple income streams, lower debt, community connections, and practical backups all form a system of resilience. None of these are exciting on their own, but together they create stability. This is where gold fits into the picture properly. Gold is a hedge against fear. It protects you if everything falls apart at once. But the Amish hedge is a hedge against fragility. It's designed so things don't fall apart in the first place. In a world built on leverage, speed, and complexity, fragility is everywhere. Systems snap, assumptions break, and when they do, resilience quietly outperforms everything else. If you measure returns not just in dollars, but in peace of mind, control, and continuity, resilience may be the highest return of all. So now everything comes down to one quiet but uncomfortable question. It's not about whether gold goes up or down next year, or whether inflation is truly under control. The real question isn't, should you buy gold? Because that assumes the system keeps working the way we expect it to. And history tells us that systems don't always cooperate. Sometimes they pause, sometimes they glitch, sometimes they stop altogether, even if only briefly. So imagine that moment. The system slows down tomorrow. Payments are delayed, supply chains tighten, prices jump before paychecks do. Nothing dramatic, just enough friction to make life harder. What in your world still functions? Do your skills still produce value? Does your income rely on one fragile source or several steady ones? Can you reduce expenses quickly, or are you locked into obligations that don't care what's happening outside? Think about everyday examples. If grocery prices doubled overnight, would you panic or adapt? If your job disappeared, would you feel powerless or pivot? If credit dried up, would your lifestyle collapse or simply shrink a little? These aren't doomsday questions. They're practical stress tests. They reveal where your real security lives. And for most people, that security isn't in a vault or a brokerage account. It's in flexibility. Flexibility is being able to fix instead of replace, to earn in more than one way, to rely on people, not just in institutions. It's having a buffer, whether that's savings, skills, or community, that absorbs shocks without drama. Gold might hold value, but it doesn't teach you how to adapt. It doesn't help you solve problems. It just sits there, waiting for a crisis to prove its worth. What the Amish Hedge quietly asks us is this: how much of your life depends on things you don't control? The more steps between you and your basic needs, the more fragile your setup becomes. When you shorten those chains, when effort turns directly into results, stability increases. Not overnight, but steadily. This way of thinking doesn't reject modern life. It just balances it. You can still invest, still save, still plan for the future. But alongside that, you build things that work even when the noise gets loud. You prepare not for collapse, but for inconvenience. And that preparation changes how you experience uncertainty. Fear fades, confidence grows. So when the music fades and the charts disappear, you're left with one honest thought. If the system paused tomorrow, even briefly, what in your life would keep going without permission? Whatever that answer is, that's your real hedge.